Welcome to Module 2 on this foundation course to help you on your journey to that sustainable, disciplined approach to the markets. This one's about market access. We're going to cover a bit of how, why, and this is the where. So enjoy the module and see you on the other side. Welcome to this second module, Teach the World to Trade. This is our foundation series to give you those basic professional level knowledge so you can get on your way to build that sustainable, disciplined relationship with the markets. This module, we're going to look at market access. It's very important to connect to the market, to see the markets, to trade the markets, right? So what access really means. What you can trade. We spoke about a lot of assets and products and markets that you could trade in the last module. How those prices are formed. What costs you pay, which are very important. Who you're trading against. Again, very important piece of information. And professionals, we think about access first and then ideas second. It's how we connect to those markets. It's very, very important for us as professionals. And you should be thinking the same. The main ways markets are accessed. So we look at exchange traded markets only as professionals, pretty much, where we look at futures, options, shares, ETFs, traded through a centralized exchange. We spoke about CME. We spoke about the New York Stock Exchange, London Metals Exchange. There's a few out there, and we know what we're getting. They're heavily regulated around the world, and you know that you're going to get a transparent order book, standardized contracts, transparent price discovery. So you're going to know when you're looking back at those charts that we'll get into later, and you'll be looking at the data, you know that is fair, just, and true. You know your fees. You know your counterparties. You know you're going to have the hedge funds in there, pension funds, all the big players. And there's absolutely no conflict of interest from the provider. The exchange, they don't care if the market goes up or down. They just want to make sure they facilitate clean and orderly trading. Then you've got your OTC or your broker dealt markets. I've coupled the CFDs and spread betting providers in this as well, which you'll probably come up against when you're on your search. So over the counter in the professional game, this is OTC, and it's kind of where you normally have a middleman, a broker, which will find two parties that want to do the opposite trade. So one buyer, one seller, one buyer of the same market. They'll get them together for a small fee, a brokerage fee, and then they'll do that trade between them, and it won't hit the market. Over the counter. You have broker dealt pricing. We use brokers. A lot of people use brokers in the trading world, professional trading world. And you call out your broker, you ask them for a price on the market. So you've done all your work, you've done analyzed the market, you've identified a trade, call out your broker to execute it, and they'll give you a price, and you can then choose whether or not to take that price. Often there's no centralized exchange. You just deal with a broker or another counterparty. And the broker very often sets the price. And this is the same for your CFD and your spread betting. They call themselves brokers. They're online brokers. And they can very often set that price. Often taking it from the exchange plus a little bit extra for themselves. So if you can sell, say tens, the market's at 10, they'll offer to sell you 9. So, a price worse, but that's the game. So the broker could be the counterparty taking the other side of that trade at the end of the day, especially with the online brokers. Crypto spot and derivative venues. Now, these newcomers, they're kind of part exchange and part broker. What's different to the regulated capital market world is there's 24/7 access. So there's no time for sleep really when you're a crypto trader. It's been one of the kind of best things for me and all the other traders in the community that, Monday to Friday, over here in the UK, you can start trading. Fair enough, it's early and it's long days. Monday to Friday, you can switch off at the weekend. Come Friday evening, you can switch off, you can evaluate, the markets aren't open, and then you can recover and then get yourself ready for Monday. Crypto, you don't quite have that opportunity because it's 24/7. There's fragmented liquidity, so there's liquidity spikes on volatility, and liquidity can be removed. It's never guaranteed. You have your spot market, you have perpetuals, which are kind of like futures, and you have your options market. Everything's there to do. And there's no central clearing in most cases. So there's several crypto exchanges, but they're not centralized. They're all their own beast. So Binance is its own exchange, but it offers the same markets as Kraken, which is its own exchange. There's nothing centralized. So that does create differences in prices. And then you've got the world of DeFi, which is decentralized finance, which is peer-to-peer trading with no counterparties. It's almost like OTC, but without the broker in the middle. The broker is the decentralized exchange, kind of like Uniswap or PancakeSwap. But that's a whole nother beast. Good to know about it, though. The professional approach. We look at exchange traded markets where, me personally, I've always had a front-end trading system and some trading software that I have to pay for to then connect to my clearer, which then connects to the exchange. So it's kind of those three layers that I've been working with for my trading life. And you have that system that routes the orders, that clearer that manages your risk and holds your deposit, your margin, as we spoke about. And the exchange, they set the prices and the market specifications. And then looking at the OTC broker side or the CFD and spread betting side. So the online broker sets the price, or the desk broker sets the price. The cost of trading, however, can be embedded in that price. So a lot of marketing and growth of CFD and spread betting over the years has been from trading for free. So I'd say, you're trading for free, which you're not really, because the online broker will be embedding their costs in the price. It won't be as transparent, and you won't be trading the live price. So you're already losing an edge on your trading. And there is always that potential for conflict of interest if you're setting the price. Crypto spot and derivative venues. There's clear trading fees, clear funding rates. What's not so clear is that liquidity, the liquidity gaps and the volatility spikes. I mean, it's not in the we call it the TradFi world, TradFi and DeFi. You can have volatility in any market, but you do tend to have larger spikes in crypto spot and derivative futures. One thing that is very good, and it's being caught up by TradFi markets, is the low barriers to entry, which means it's easy. It's easy to set up an account, easy to fund. You get big leverage, and you can trade many markets very cheaply. But low barrier to entries, they don't mean lower risk. And the barriers to entry of professional exchange traded markets are getting lower and more accessible. Hence why I'm here to try and help out. And we at TWT are trying to increase that education and knowledge base for traders like yourselves to go and succeed on the markets. Costs. One of the unavoidable things about trading that costs do come and bite you, I'm afraid. Exchange traded markets, you have three clear buckets of costs. These are your variable costs. You normally have a broker commission, which is per traded lot. Your exchange fee and your clearer fee per lot, which is added to your then monthly market data fee. Now, these costs are very clear on a lot of online brokers that you can access exchange traded markets on. There's more than ever. I know the CME is very active on pushing their markets onto the retail community, and you're getting a new subsection of retail trader, which is kind of like a pro-tail trader, which is trading the professional markets, but as a retail trader. And this is a huge explosion, and I think it's going to be growing exponentially over the next few years. We've seen a huge take-up of trading over the years in crypto, and I think a lot of these traders want to come to these regulated markets where the ease of access has increased. But you've got to understand your cost base for each trade, so then you can factor it into your trading. It's very important. The OTC and the broker dealt markets with the CFD and the spread betting can be small or no fee to access the market. Again, to lead you in to have that access and be trading on their platform. They can have a small or no fee to access. Some have no fee to trade, and many take their cut through the spread versus the live market. Okay, like we explained before. Some online brokers also become the counterparty as they know you will lose. One firm in particular I know had a very good year because it didn't hedge all of their clients' trades. So they worked with an assumption that the majority of their clients, the traders, retail traders, will be using their product, their platform, and they'd lose money. So there was no point matching their trades with the underlying, which would be on the exchange. So they just factored through the losses and took the money. So they were the counterparty. They were the exchange in essence. Crypto spot and derivatives, free to access live data. And the costs vary if you're market making or price taking. Their costs are cheaper if you're market making, I believe, because this adds liquidity to their markets, which is what they want to see. But liquidity can vanish very fast. And exchanges have gone bankrupt before. I mean, it's still in its infancy as a market. It's growing all the time, but very much the Wild West in terms of regulation. And, things like exchanges going bankrupt have happened before. The data and tools of the professionals. There's non-negotiables to trade. You've got to have a professional charting platform. We're going to chat about charting in one of the other modules. Very important to have that. That's your window into the market and evaluating and researching the market. Having live native exchange data. As professionals, we never use spread betting accounts. We always have to see the live market so we understand where the market is. And it's fully transparent. An execution platform. A lot of these are now built in. Your live data, your charting, and your execution platform all in one. If you find a good, when you do your search, I'm not here to recommend platforms, but you do a good search and now you know all these bits of information, you'll be able to find a good platform that will do all of these for you, as well as an economic calendar. These are very important things to understand what's coming out and the data. We'll talk about that more as we go along. News flow that moves markets, understanding where the news is coming from, when it's coming out, and how it's going to affect the market. I mean, that's trading 101 stuff that we will also cover in this and further courses. You need reliability, consistency, and transparency. So why do professionals care about this? Professionals ask, who's controlling the pricing? Where is the liquidity? And how is risk transferred? And then what happens if things go wrong in a stress scenario? Will my money be safe? Will I be able to trade? And a lot of retailers I speak to, they ask, what's the minimum deposit? And how much leverage can I get? Okay, that's module 2, how to access the markets. You've got to think before you work on the how, you need to understand the where. I hope you enjoyed that module, market access. Not the most glamorous part of trading, but a very, very important foundation. And that's why I've discussed it with you. There were no recommendations there, but a lot of information for you to take on and then go and make your selection of your avenue and your arena of where you want to trade and what you want to trade. Okay? As ever, see you on the next module and stay lucky.